The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and the host of the show and the author of the opening call, my daily newsletter. And this is going to be very interesting because the Dow has had a very sharp pullback intraday. There is news that's going to come out one way or the other in 12 hours' time. In less than 12 hours' time, tariffs are either going to be put in place. My suspicion is that, let me just talk about it in the game, right? That Trump probably needs, for his own, let's put it this way, political and on a purely technical basis, Trump needs a win of sorts. He needs to be able, for Trump, a win is 51%, and then he claims it's a fantastic win. So all he needs now is to be able to get the Chinese to compromise. And what's interesting about this, when you look at the FXI, here's the FXI, which is this is the big caps. This is the large iShares China large cap ETF. Look at this. It's had a much deeper pullback than the Dow, 45.96 on the 5th of April. Recovery high, all-time highs way back at 54 round number. January of 2018, just like the NYA. The New York Stock Exchange, it too has not made all-time highs. It did plunge down to 38, then a rebound to 46, to the 45.96 area, and now it's trading at 41.26. So there's only a 10% correction, right? Dow's had less than that. But what's really important about it is the weekly chart has really taken out the 200-period exponential moving average with 1 day to go, 1.5 days to go for Friday's 4 o'clock close. And the monthly chart is not looking that good. So if I'm looking at this, I'm saying to myself, from everything I read, and of course what you read might not be the truth, but that's just the way it is. It's all I've got. It seems to me that China's had a pretty severe economic deterioration over the last, I'd say, couple of months, certainly. So we always look at them and say they've got patience, but actually now they're in an economic world that they haven't been in the last 10, 15 years ever before. Or I shouldn't say ever before. They've had periods where they've done something that is based on Western philosophy more than their own philosophy, and then things have changed. So I am looking at this and I'm saying to myself, now, what can I look at objectively with the little knowledge I have about the whole smorgasbord of economics and what's happening in China? And I'm saying to myself, wait a minute, surely on the north of the border, you hardly ever read about this. I mean, in all the time I've been here, I always marvel at how absolutely no news about this is certainly the longest border that we have. It happens to be called Canada. But surely Canada and then Mexico, together, those economies are pretty darn important, very big. Maybe, I don't know, but maybe about as big or maybe even bigger than China. So this is like a three-sided chair, it's a three-legged stool. And I think that if you look at this in the potpourri of what's going on, this is an important moment. But what has happened up until now has shown that our market has been very resilient. Even today, there was some very good economic news. How long that can go for without being derailed is going to be very important. I think the China part of it is very important. And these tariffs, I'm not sure exactly how the tariffs are going to work, but there are going to be parts where inflation is going to start. Maybe there are other areas where deflation will be continuing. So when I look at this, I say, at the end of the day, that's at the end midnight, there might be some kind of a compromise, and it might only be the big move tomorrow, 400 points up, 300 points down. Who knows what it could be? Probably be a little relief rally or big relief rally, but whatever it is, it's next week that I want to see what happens. Maybe there's a big arch formation. Maybe the Dow, because the weekly chart has already gone under the 14-period moving average, turns that 25,000, I think it's 900, 25,900 into an area that says you might go above it for a little bit, but you're going to come back and do some retesting as there is still some uncertainty, or maybe some things are delayed for a couple of weeks, 3 weeks maybe, whatever it is. So as I'm looking at this now, this is a well-deserved break that I wanted to see in the market, number one. Number two, we have to wait tomorrow until 4 o'clock before I can really discuss the weekly candle. And that monthly candle is still way up in the upper range. It touched the 9-period exponential moving average around about the 25,070. Let me double check exactly what the price is. There it is, 25,513 area. What was the low today? 25,517. We came within 4 points of the monthly charts, 9-period exponential moving average. A chunk of what I was looking at has occurred, but maybe we still need more time and a little bit more price. That's the way I'm looking at it, number one. Number two is, when I think about it in terms of the FXI and China, if there is a rebound in China because it's just hit and went under the 200-period exponential moving average of 40.62, this is the, I'm using this as a benchmark for me, the iShares China Large Cap ETF. If it can rebound, maybe get to the daily 200-period moving average of 43.18 and then even go a little higher to the mid-43s, that would say to me that what has just happened in terms of any kind of compromise is being received by the market positively, but I still have to wait a couple of days. I want to wait until maybe Tuesday or Wednesday to really get a sense of what's going on. Why? Because if there's bad news, and as I say, I think that Trump has to push as much as he can for whatever he can get, because this is a very important moment in many ways, political, let alone economically. And in another way, I think China is almost in the same situation. They're not used to this kind of deterioration in the economy, and I think it's going to be a worry. They don't have all that much time. They need to start working at it right now. So that's my contention in terms of what to look for. It isn't the response tonight or tomorrow. Already you can see the E-mini. Look at this little E-mini right here. The E-mini is trying to get off the lows, hasn't done all that well yet, but at 28.50, if this afternoon at about 2 o'clock, let's say, the E-mini is above 28.65, that's like another 16 points above here. That's saying, hey, maybe there's some rumor out there that there's going to be some receptive response, but if in fact we take out today's low of 2836.25, that would not be good at all. All right, let's get back to the nitty-gritties. Here's what I'm concerned about. You see the IYT, we were long, we've taken profits now, we've got stopped out, it's still got a nice profit, not great, but it was really good when we were up in the 200.42 level. I thought there was a chance we'd pull back and then try to rally back, and we did, but now it's starting to fail, so this is important for me. I want to see the transports, the IYT, moving higher with the Dow. I don't like these lower lows and lower highs. That's not a good sign. I'll be back straight after these messages. Dow's down 327.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Folks, we're back. So the 2-minute chart of the E-mini shows that there was a low made this morning at 11:30. That was at 28.36.25. We're now trading up 20 points, almost 20 points from there, just about hit the 200-period moving average in the 2-minute chart, leg D, and we'll see what happens after this. We'll come back to it. All right, so let's go back to this. So this is what I'm looking at. The other scenarios, if there's a response that's favorable to the market, by tomorrow, the futures will be very much higher, all right? And what I would anticipate is that the VIX index is trading right now down even more. It's down at 20.61, having hit 23.38. This is in leg E in the daily chart. I mean, and the stochastic's only at 69%. It's actually quite weak. But the price, the MACD, is really skyrocketed. All I can say is that if overnight you wake up and the futures are up huge, then you'll see this VIX index down at the 16 level, somewhere maybe under 17. So that's going to be very important if it holds there. And we'll look at the TLT, that's bonds, and my suspicion is bonds would be trading at 124.86 via the Lehman 20-year Treasury bond fund. Did not make a new high today, so far we're looking at it as leg D at 125.30. Today's high is 125.30, so it's still leg D. If the TLT is trading tomorrow in the morning, early morning, under 123.80, a point lower, and the general market, the futures are up very sharply. And I did have another day of this. Look at this is incredible. My Chapman Wave trend gauge has been, I think, out of 4 sessions, or it's had 3 at very high readings. So that is kind of getting oversold. So if in fact that's going to work, there should be a 9 to 11 point rally in the E-mini futures. I think we might have already done that, but that's another signal to say the surprise might be that in fact there is something to look at positively, and the market responds very favorably. So that's the VIX index plunging, the TLT pulling back, meaning yields push up a little bit, and the futures are up very sharply. All right, that's what to look for. I want you to just go to crude oil now, because this is all part of the panoply of what we're looking at. there is an up channel here in the crude oil continuous contract, a very longer term one that goes back to, I think it's January. Let me show you. Yep, it's to the December low, really starting with the highs that were made all the way into January and February. And that's just been consistent. And this is the deepest pullback and longest pullback it's had in quite a bit. And if crude oil closes under 59.30, it's trading at 61.45 right now. In the next 3 sessions by Monday or Tuesday, that's going to be a break of this major uptrend support line. And that's going to suggest you've got to be somewhat careful if you're looking at crude oil as some kind of a benchmark. If crude oil actually jumps up and gets to the 63.80 to 64 level by Tuesday or Wednesday, that's going to be good for crude oil. And it's right at the 200-period moving average in the weekly chart. I wanted to just look to show you something very important for me anyway, high-grade copper. High-grade copper is pulled back from a peak D in the weekly chart. Remember the Chapman wave always looking for 4 higher peaks, A, next peak is B, next peak is C, higher peak is D, and that's where other things can happen. Look what happened. It went to just on $3, and was a fraction under $3, and now it's trading at 2.76. If there's a big rally tomorrow and high-grade copper actually starts to rally well, and you see wood, which is the iShares Global Timber and Forestry ETF, which has just been pummeled in the daily chart since it hit the 66.40s back in early April, now trading at 60.98. This is 10% down. I'm looking at this, and this is world timber, same as you got world copper. So this is going to say to me that if it rallies sharply and sustains into Tuesday, maybe we've got a turnaround that's much more meaningful. So those are aspects that I'd be looking at. Now let's look at the IWM, which has been the laggard in many ways. The chart formation on the weekly is actually a lot better than the others. But what's really important as far as I'm concerned is that it held the 200-period exponential moving average this morning, a gap down, held the 200-period moving average. The MACD and stochastic are turning down, but they're not that bad right now, 56% in the stochastic. But that weekly chart still hasn't turned negative. It's at 87% in the stochastic, and the MACD is still good. So I'm looking at this and I'm saying my contention has been for a little while that the XLK, the whole tech sector, had so many stocks that were really screaming up. I mean, let's go to the Microsoft for a moment. Microsoft, one of the year 2000 major declining stocks in the tech sector, finally made a new recovery high, then a new high, and then it just blew past that, and it went to 131.37 back on the 25th of April, and has pulled back just quite slightly, actually, to 124, 7 points. No, it's not 5% or so. But look at this, the peak D in the weekly chart. Look at that straight up move. Look at the monthly chart. It just says, wouldn't be a good thing looking out into 2019 if these stocks took a breather. We were looking at, was it Team the other day? Team, which is the Altasian Corporation. Yesterday it had a really strong leg D, and I said there are a couple of these stocks that just don't want to give up, and this is one of them. Look at this breakout to a leg D in the weekly chart, leg E in the monthly. But even here, you could see some kind of a pullback at some point soon. But look at this other one, TTD, which is the one that I often talk about. It is the Trade Desk, Inc., A-shares, self-service ads. In other words, the companies can make their own ads. It helps you do that. This is going to be very important because within the context of the markets, I've still got this only in a leg C in the weekly chart, but what a smackdown. 29 points down from, it's at 193, makes an all-time high just, 5 days ago, makes an all-time high at 232.70, and this is what I've been talking about, that I'm a little concerned that some of these stocks have really gone sharply higher when the weekly charts were quite good, monthly charts were good, but the daily charts were showing that there wasn't enough veracity, enough really legitimacy in the move up. So it went to peak F, and now it's trading down, made a low today of 180.50. 180.50, 50, more than 50 points down from where it was 5 days ago. Hey, look at this one. I haven't actually done anything with it. I just saw it going by on the ticker. I remember talking about this way back saying, this is an unbelievable company. What are they doing right? It's just plain old stamps, STMP, stamps.com Inc. And it goes all the way from, I mean, this is a stock that goes from the 50s a couple of years ago, screams up into the 200 triple top at 285.75 in May. And then it gets cut in half. Remember talking about this, saying, I'm not going to touch this, but isn't it incredible that it ran up? It gets cut in half, and today it gets cut in half again. So now it's trading at 38.83. I would say that what is about 78, 82% decline. I'd say that's a pretty big decline. Wow. Anyway, I'll be back. The Dow is now down only 271 points. I'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Let me just quickly show you two things. One is 2830.65 is the Chapman Wave automated support level in the S&P cash. This is the daily. And I've got a lot of support levels that were taken out. And the last one's at 2831.81 on the 120-minute chart. So this turnaround right now with the S&P cash at the high of the day, even though it's down 19 points, this is important. And I just want to do this real quickly. Perhaps tomorrow I'll spend a little more time on it because I never ignore this. But I have a couple of people over the many years and months they send me charts with the margin debt. Here's margin debt and Wilshire 5,000. The red is the margin debt. This is I think this is from the charts are from Yardini, I believe. Yeah, Yardini Research. So this is going to be important because you see the sharp pullback, and that was going into, I think it was right up until early May, late April. So I'm looking at this right now, and it says to me there have been coincident pullbacks as it's made its peak. You've got to be watching that. But there very seldom has there been a rebound like this V-shaped pattern as you got in the cash index of the Wilshire 5,000 index. When the margin debt is turned down. So it's just something to note. But actual pure margin debt, look at this, back in 2008, that was the high. And then it's pulled back, It's now at a lower level. So I'm just going to say, yep, I'm keeping my eye on margin debt, but it isn't for me anything of the play at this particular, it isn't for me. And maybe for others it is, but it isn't for me, just at this particular point. Okay? That's number one. Number two is, so that's number two. Number three is, if I look at right here, look at the Dow in terms of the support levels. The Dow is a support level. Remember I said there were many resistance levels, but only one support here, 25,467, and today's low is 25,000, what was it, 517. So we are really close. The Dow has not come back like the S&P. It's down 223, way off the lows. This is very, very nice. This is a good candle. The day is young. We'll see if there is going to be a rally right into midnight tonight, into tomorrow, then we might have seen some kind of a low. I must now just say, what if we're wrong? What if there is a report, but the report is, I don't think, at this particular point, I'm not sure that Trump will do anything that is nebulous. I think he's going to make some kind of a statement and then go from that statement to say, and if such and such happens within 3 weeks, the deal is done. But it's something like that. If that's the case, then we could have some choppiness over the next few weeks. But let's just look at the negative case. I've told you what will happen if there's a positive. If there's a negative case, it's going to be so disappointing that the low of today of 20, at the Dow at least, the low of today at $INDU, dollar Hindu, minus the low today, says that the 25,000 next level of support, if it takes out today's low, the next level of support is the low that was made on the 25th of March of 25,372. And then I think, I wouldn't call it a final low, but a major low between that area and 25,250 is that left side low that was made on the 11th of March before that big rally. So those are the areas I'd be looking at if it's negative. Or if we rally a little bit and then by Friday afternoon, we're already starting to fail, and Monday we come in and it's down. So I want to be looking at both sides. Now, in terms of positions, look, I had a question about the SMHs. The SMHs, which we've been short for a little while, went down to 108.14. They're trading right now at 110.12. So from 120 to 110, 10 points, what is that, 8% or so? It's not such a bad deal. But when you think of where it's come from, I would think that there's more time. Doesn't have to be all that much more price. That's number one on just a chart formation. But if there is a report that says China is going to do X, and that X responds to helping the high-tech sector, then there's no question that you should get a pretty decent rally and bounce in the SMHs. I'm just thinking that there's got to be some regression to the mean if what I'm still hearing about orders still not coming in anything close to what you're seeing in the price movement to the upside of the SMHs going from 80 to 120, 50%. I mean, that's unbelievable. 80 to 40 to 120, a 40-point gain. There are not double orders or anything like that. The orders are only just starting to come in. So I want to see how that resolves. Now, here's another thing. Does wheat, 430.5, minus 8.5, testing lows. If wheat is able to bounce sharply, because maybe that's what China comes up with. They say, hey, we're going to buy your grains. We're going to buy this. We're going to buy that. Specific things. Maybe that's going to help. So we're watching that very closely. Let's see what happens to soybeans. Soybeans right now. Ugh, I didn't want to look, but I am. It's down 15 at 811.75. It's making even a lower low than the other. Oh, this is a horrible pattern. And crude oil, corn is trading at 355.75, down 8.5. Wow. This cup formation has to turn into at least an M formation with a big bounce. So those are the things that I'd be looking for. Now, someone's given out a little leak. You know that's going. You knew that it was going to happen sometime today. Well, look at that move. The E-mini has gone from the low of 2836.25 to 2866.75. Just 15, 20 minutes ago, I was saying right here, hitting the 200-period moving average of 28.54. If we can get to the 28.66 level, that'll be good. Well, it just took that out, and I'm not sure if this is leg F or a brand new B. Is this going to be a rally into the close? We'll see, because now the Dow's only down 184 and the S&P's down 12. Good comeback. Somebody has leaked to the press a little story there. Let's see what happens. Yep, there's your cup formation. All right, so the next level of resistance we'll be looking at is right there, just a little mini bounce. Oh, right there, the peak D, but it was made back at the 28.69.5 area. Yeah, so that's 29, 28. Oh, a high, 28.85, and that high was 28.68.75. And we're almost there. Within the eye blink, we'll be there. Something's happening. So, with that said, we've got a new person, Representative Tulsi Gabbard, announced a Democrat candidate for president. Wow. Okay. All right. I guess the more the merrier. Now, what we're looking at is just, let's get to the nitty gritty. Let's see if the TLT is falling. TLT right now. Yep, it's dropping a little bit. It's at 124.72. The high today is 125.30. Let's see if the VIX is really taking a dive. The VIX is, yep, taking a dive down in the 19s after being in the 23s. Ooh, something's happening. Anyway, this is the volatility that you'd expect on a day where major news is going to be announced. So there's no room for error right now. There has to be something that gives. Let's see the euro, EUR USD trading right now at, it's giving back some. It's at 1.12, and the dollar, is that doing, what is that doing? Dollar is down 0.28. Okay, I'll be right back. Basil Chapman, Tiger Nations Hour. We'll look at the XLK.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African Rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the Gold Report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your Gold Report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So the RTYM 19, this is the E-mini Russell 2000 index. This is the June contract, has screamed from a low this morning. It made its low before the S&P. It went down to the 1546 level, 1546.70, and it's trading right now at almost 30 points high at 1,572.10. Leg D second. This is the third leg D. If it makes a peak, it'll be the third peak D since that low was made. What a really strong pattern this has made. Let's get back to our nitty-gritties. Let's see if the IWM is acting as well in this environment. Yeah, so the IWM now is down 0.60. This is going to be important because it's down 0.46% at 156.04. The Dow's 0.74%, and the S&P is down 0.46%. And it just held the 200-period exponential moving average. So my contention has been that the IWM overall has actually done a little better than the others, even though in the bigger picture it's lagged, it hasn't made all-time highs, and that we're going to see whether or not money starts to flow from the those high techs into something like the IWM. Well, we'll see. The day is young; anything can happen. Whatever we're looking at in terms of rotating through the different sectors, look at the XLK. The XLK, which is the tech sector S&P 500, S&P Spider, has gone to a leg C to the downside, 79.70 to today's low, which is in the 74. Oops, why is that late? 74.66 area. 5 points. Yeah, it's 8%, 7%. Not bad. And the weekly chart's had a spectacular. In all the time since the December low, it's had. This is the third red candle at a peak B. It is incredible that it's been able to do that and to go to all-time highs. And all-time high in leg B, that's the only way I can count it right now, suggests there should be a C and a D to the upside at some point. So this is very good action. My look at the daily chart suggests that there could be a bounce, but then you could also do some retesting. And maybe it's now going to be more time than price. I just don't know. We won't know until maybe Tuesday. If we've taken out 74.66, the low of today, that's going to be a negative. And if there's a takeout of the 14-period moving average of 77.32, that's a pretty big positive. We'll see what happens. But whatever it is, I'm pretty sure that the Trump administration is going to do its absolute best to get the look of the best deal possible, number one. And number two is to have it look like it's a win, at least at this particular point. When we look out, we might find it's a fantastic win, or we might find out it was a terrible thing. We just don't know. And in fact, this is all kind of, I should use, this is on purpose, this is foreign to us. I mean, we've not had tariffs for how long? I mean, forever. So this is all new to us. How it's dealt with is going to be a big issue. And the market up until now has not liked it very much, certainly over the last couple of weeks. Now, that's, did that. Oh, IYR. Let's see how the REITs are doing. The IYR just holding steady in the lowercase h pattern, trading at 85.81. I do think it's a peak B in the weekly chart and a peak B in the monthly chart, and that's really positive looking out for the REITs. Did I finish that with the IWM? I got a couple of questions. No, yes. So you can see that there's a rising wedge formation that says 165 by middle of June. That's kind of what I'm looking at here, and it really depends if the IWM trading at 156 right now takes out today's low of 153.74, takes that out and then closes under the 200-period moving average daily at 154.17. That'll say, nope, it's going to take more time. So far, this is actually not a bad-looking chart at all. Let's see. I had a question about crude oil at this point is still, yeah, it hasn't changed. It's down 50 cents. But I was asked about natural gas. I can't remember who or what or where. But natural gas trading right now at, this is the continuous contract, just stuck at the 2.59 area. So that's going to be interesting because it's come off the bottom in a trough G. It's gone to a peak B, and it's just holding steady in the lower end of its range. I'll just make it real clear. If in natural gas, and this is not probably the right time of the year for it, but it hasn't been the right time at all for the last quite a while, for the last year. But if natural gas is trading above 2.65, there's a continuous contract at 2.589 right now. That's going to be good for natural gas. Oh, I remember what it was. Question about, I showed you wheat, I showed you soy, I showed you corn. Yes, the question about coffee. Coffee right now is trading, has come off its lows. Just the question was, has coffee made a low? And all I can say is it's made a low, but I don't know if it's the low. It might be the J low. But what I am looking at here is it's gone to a leg E in the weekly chart. The weekly chart, MACD is okay. Stochastic is actually rallying a little bit. You'll only know that this is a low of consequence if two things happen. One is it goes above 92.30 and it holds there. And number two is when it pulls back, after it pulls back, it mustn't go underneath, I would say it mustn't go underneath 82.30. So those are the parameters I'd be looking at. Is this a starter position? I suppose you could call it a starter position, but that's a tough one. It's a tough one. I think I've covered all that I needed to cover today. Oh, yes, of course, XLF. XLF is trading right now down 14 cents at 27.22. At 27.22, it is only a little bit off the most recent high of in the 28.14 area. This is actually pretty nice action, considering that the weekly chart has gone to a peak. See, it's had a much bumpier ride than the other indices, and the MACD is still good, and the stochastic still stuck at 94%, even though the daily has really started to fail, and that's what we were looking at the other day. Let's see what Goldman Sachs is doing. Goldman Sachs right now is trading down 44 cents at 200.51. Kind of represents in a way what the XLF is doing. It's just nothing to see here yet. Let's make it real simple. Goldman Sachs starts to trade at 211 in the next 3 weeks. Really good action. Starts to pull back under 195, and the sideways consolidation just continues on and on and on. XLF trading right now at 27.24. I was asked about the monthly. The monthly, you remember that downtrend line that I drew in, the Chapman wave falling axe formation, lower highs and much lower lows, and then it tries to turn, make a V shape or a cup shape formation. Well, it needed to close decisively, remember, in the 29.80 to 30.20 area, just to break away from this dashed green line resistance. So if I wanted to be kind of clever about this, I would put this in and say, this is the Chapman wave inside track repellent resistance area right there, and it's underneath it right now. So this is saying XLF needs to get to the 2850s, and I would say that it has to do it in May, and sooner rather than later, and that would be a big positive. But so far, sell mode in the daily, we got to wait for it to turn around. I'll be right back. The Dow is down 190. I'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. Interesting email I just got says, Basil, let's be real. Is there anything technically that can give us information about what's happening the next 2 days? Maybe the entire TFN staff should have taken a vacation today and tomorrow. So, yeah, thank you, Kevin. Yeah, you're probably right. But I'm looking at this and I'm saying, well, we just saw that it went right down. Look, both the Dow and the S&P went right down to the Chapman Wave automated support level, the first support level we've had, all the way down. This is it. And it hit it pretty much within points. So that, to me, says, yeah, technically, regardless of what's happening now, those are the things to watch. And that's one of the reasons why I said for us to, in my opening call, for us to raise our position as the stop position in our shorts, because you never know how things are going to turn out. And maybe with such a big gap up tomorrow, the shorts just get wiped. Who knows if get wiped out? I don't know. But all I can say is just you do the best you can, and you stick to your technical veracity. That's all. Nothing else you can do. So I said to you what could happen both on the upside and the downside. Most importantly, the 2-minute chart has made a little peak in the Russell 2000, the third Peak D is pulling back a little bit. Let's see what the ESM at peak F did. Peak F, yep, it's pulled back as well. Hey, you just go one step at a time. That's all you can do. But I am a little concerned that the IYT is starting to fail. If you look at the airline index, XAL, even with crude oil pulling back, XAL is up to only 24 cents. It's really not, airline index is just not doing very much. So let's just let the day play out and see tomorrow when I have the show tomorrow this time, we'll have a lot of information and a lot of things are either right or they are wrong. And look what happened. We didn't take out the 25. Oops, we did. So this is very interesting because this candle right now in leg F to the downside in the 120-minute chart of the Dow, if it closes above, that'll be a cover, complete. No, it won't. It has to close above 25,878.85 on a 120-minute hourly basis, and that'll say it's starting to fill the gap, and that's going to be very positive. And yeah, you're on in the daily chart. That's what I was talking about, 25.67. All right, we'll just see how this plays out. In the meantime, be safe, be careful, and stay tuned for Steve, Dave, and Tom. Have a great day. I'll see you tomorrow.